All right, good afternoon, and thank you for joining the Energy Market Update. A special welcome to all of our channel partners on the call today. The hot weather is here and it's got some of our markets moving, while some of them might be following in their footsteps after the next couple of days with the high heat in the Northeast and Mid Atlantic. Before we get to that, sticking to the normal agenda, first going through natural gas fundamentals, followed by market news, take a look at the updated weather, and then the market data to see where prices have been. So starting off with natural gas fundamentals, it's here for us every week. It's a very important story as we push through summer and start looking at the winter rates that are going to impact those term pricing for the next several years. So we had an injection that was much different than what we've been seeing lately, 13 to 14 BCF to be put into storage. So this is a very low number for this time of year. Maybe closer to 50. We were seeing as high as triple digits in the hundreds for injections. So will this continue these lower numbers? Because this could rapidly change the storage picture that we have been in, which is a pretty comfortable one, to something that's a little bit more unsettling and you get prices to move back up. So 13 to 14 was the estimate. We came out a touch above that at 16. But again, this is a low number overall. And the important number we're looking at is where we compare to that 5-year average. So we've been hanging mostly in the 360s or so. So now 345. So still a good cushion above that 5-year average. But if the direction starts heading down for storage of actual compared to the 5-year average, we should see the opposite effect on prices where it starts to get more risky, especially for the winter months, which are the highest months for a lot of our major markets. Just taking a look at the picture here, and indicated by the green arrow all the way on the right, you see the blue line starting to hook down. Now, it only looks like a small hook down, but these are billions of cubic feet each time it moves that way. So if we start getting close to the gray line, expect prices to move up. If we drop below that gray line, expect prices to really rally. And that's the slow moving story that we're going to see through the rest of summer into fall. And where do we end up by the time that winter gets around? So one of the other things that's happening now too is gas production. We're going to keep an eye on that over the next couple months because that's essentially what storage is: production, storage, use here domestically, and exports through LNG. And if that production really falls off as well as and LNG increases, we could quickly see this blue line change below the gray. And if we look back to the middle of the chart of July of 22, we were hanging well below that 5-year average. So these swings can change very rapidly, and that's the outlook for the winter that we need to keep an eye on. Early market estimates for the next report coming out for 7/28 are calling for an injection of 14 to 34, pretty wide right now. The estimates actually took a while to come out because people are kind of uncomfortable with this number being so low. The hot weather being out, kind of hard to peg, what's going to be coming around next week. Some weeks are easier for these estimates to come out. Other weeks, a lot of uncertainty. Uncertainty usually breeds prices moving around and volatility. So as we look going into the future, the white on this graph is what's actual. The gray is forecast. We see the orange line for production. It goes up a little bit into the future and then really kind of tails off. And this is really small movements here. Touch up, down. So production might go up a little bit, but nothing dramatic. On the other hand, exports are supposed to be increasingly picking up. Right now, we've hit new records just recently, 14 and change going out the door to other parts of the world, not going to citizens here. So less supply here puts upward pressure on prices. And some forecasts have by 2028 to 2030, the exports doubling from where they are right now. So if we're doubling exports and we're not really increasing production, we're at a net loss of supply. So where is that being sent? It's being sent around the world. Some of the most commonly talked about points are the National Balancing Point for the UK, Title Transfer Facility, the Dutch Virtual Trading Hub used for the EU, and JKM, the Japan-Korea market over in Asia. So this is a new graph this month, just showing the upside and downside risk revolving around price movement. So this is, again, just the Henry Hub, really short-term price compared to the terms that we look at. But the black arrows you can see are clearly bigger than the red arrows. So the chance of prices moving up are a lot higher than chances of prices moving down. And actually from the June outlook to now this updated July outlook, the prices moved even a little bit higher on the black arrow. So they could go even higher than was just forecasted a month ago. So that's the risk of what people are putting out there. If they don't lock anything in now, which why it's a great idea. They don't want to fully fix in, at least take some of that risk off the table with some type of hybrid strategy. Taking a look at market news, a lot of stories about wind that we've been talking about over the past couple of years, but there are a lot of lofty goals for building offshore wind, especially up and down the eastern seaboard for most of our major markets. But they keep running into issues and delays. A lot of them have been citing economics of the projects, whether it's high interest rates, supply chain issues, and they are already very heavily subsidized. So they have a lot of free money they're already using. And now, because higher interest rates and supply chain issues that we've been talking about have gotten worse, they no longer make sense to move forward with the project. So in Massachusetts, we had a lot of issues with the two big offshore wind projects here. In New Jersey, they've had similar issues with bringing on these projects and met some delays. In Massachusetts, one company paid $48 million just to walk away from it because it was so uneconomic because the change of supply chain costs and interest rates. So companies are willing to pay huge sums to walk away from a project, even with the subsidies that they're getting. So it's just showing you how hard it can be to bring on these actual projects versus someone just saying, hey, we're going to have a new offshore wind project in 4 years. There's a big disparity between those two things, and being able to accomplish it is really what's important, especially since we're shutting down fossil fuel supply. So we're shutting down supply, not able to necessarily bring on new supply as forecast, or if at all. So where is that supply going to come from? Less supply puts upward pressure on pricing, and that's the situation that we're looking at. And then we have the state of Rhode Island, who just called off an 884 megawatt project, the Revolution offshore project, citing these exact same concerns. So our question is, if we don't bring on these projects, what's that going to do to prices? Let's strategize now with clients. Now, rolling into this is the announcement that came from the Fed yesterday. So Fed Chair Powell came out and said, you know what, we're going up another quarter point for interest rates. So that brings us to a 22-year high for interest rates. So that makes borrowing money and financing projects more expensive. So therefore, even harder to bring on projects. So this is just new news yesterday. Is that going to cause any more problems? Especially since moving forward, during the June meeting, they expected at least 2 more rate hikes this year. Well, now there's one the very next month. We still got a lot of months left in the year. Is there going to be another more than just one more rate hike? And when asked of, when can we start cutting rates, he was very tentative in meaning saying that it could happen next year. So it's making the economics of bringing on new projects even tougher. So how is that going to impact prices for the coming years, especially if it becomes a hot end of summer and prices move back up, or if we get that cold winter coming through, getting prices to move up and really show that the strain that the grid is going to have to deal with the growing demand through electrification. Moving on to that point, we had ERCOT just hit another record day. So on July 18th, they got almost to 82.6 gigs, but 82,592 for the megawatts. They hit for a new peak. They basically were hitting a new record each day. So it's showing the demand is growing as changes on the grid pushes away from fossil fuel-based things or just appliances. So demand is growing among our major markets. If a lot of these rules that we've talked about over the past several months from the EPA or other departments in the led by the White House come through, or the DOE, and we need to get rid of gas stoves, and all of a sudden everything's an electric stove, and we get rid of gas cars, and everything needs to be an electric vehicle, and we have to charge those cars. Especially areas in cities, their demand is going to go through the roof, might double or triple some of the projections have it at. So how are we going to hit these extremely high new demands when we're shutting down the reliable and resilient supply? It's making for a very tough balancing act for us to pull off. And then when we look at some states that have kind of pushed a little further and faster than others, we have California. A couple months ago, they were passed a law about tailpipe emissions and only not being able to sell gas cars in the state. And a week later, they came out with an announcement to don't charge your cars because it's too hot out. We need to save energy. Well, during the month of July, they've come out with several energy emergency alerts, EEAs, saying among other things, please conserve your electricity. We're having problems balancing the grid. And that's before all these big rules of changing over to all this electrification take place. So it should be a warning to, the rest of the country of this is what can happen if we don't plan this correctly, because it really is an engineering feat, not a political move, if we're going to get the grids to be resilient and reliable. And with prices where they are right now, it's a great point to lock in some of these future years, or at least a portion of them, with the uncertainty that we have ahead. And kind of on that same note, there was just the recent G20 meeting, and the important part for us is what the energy ministers worked on. So a lot of plans, maybe hydrogen, maybe going clean, maybe decarbonization through capturing carbon. But the one thing that was really important was they were trying to get a push for consensus on moving away from fossil fuels very fast. And a lot of the countries, and they were citing the EU especially after what happened when they lost the Nord Stream pipelines and basically sent the world prices higher, and some of the states in the US, like California, that have had rolling blackouts because of the policies they've had, saying maybe we don't want to go down this path that fast. So some pushback from other countries around the world about some of the plans that have been pushed into the countries. And again, politically agnostic, just what's happening to supply and demand, how it impacts prices. So it's not till late November, but the next UN COP28, which is basically dedicated to making countries do pledges towards this clean energy change, it might either speed things up or it might tap the brakes a little bit. It doesn't seem to be changing in the United States with the current administration, so we expect those changes to continue to come out rapidly. And one of the departments that have been driving most of the change of the rules is the Environmental Protection Agency. We know they've now lost at the Supreme Court several times for overreach of power that they were not allowed to do as unelected officials, and it was never put in their congressional purview. But they've been coming out basically death by 1,000 cuts to fossil fuels, with coal really the main target in sights. If we lose coal plants overnight, they're offline. Again, building the new renewables of offshore wind and solar take a lot more time, and we have a lot of issues that are really causing a problem with that, whether it's the economics or our relationship with China, which we're going to get to in a second. So when it comes to the relationship with China, it's becoming more and more important. We're kind of giving the keys over to them because fossil fuels we could do here. We have enough natural gas underneath the United States, to get us through the next couple hundred years. On the other hand, we don't have right now the economic way or the materials to manufacture a lot of our renewable projects or electric vehicles. So we're relying on China for minerals, refinement, the actual manufacturing, and then to get them here. Well, one of the things that happened is, we've talked about this for a while, is that a lot of 4 Southeast Asian countries were importing Chinese products to the U.S. They've preliminarily been found guilty. Bipartisan legislation was made to overturn the waiver that President Biden granted that only lasts until June of 2024. But the question is, what happens comes June of 2024? We can't be building solar here for the same price that you can in another country with the minimum wage and health benefits that we offer here in the U.S. And we've already, the IRA, close to $400 billion in aid towards energy. We have the ESG rules for your 401k touching around $12 trillion trying to be pushed towards this. So this is a huge monumental hill that we're trying to climb, and a lot of problems that could happen along the way. The biggest thing would be China tomorrow saying, hey, you know what, we're not going to work with you. We're not going to send you any renewable mineral supplies, any manufactured project. We would really not have a place to turn to solve that problem overnight. So on the relationship between China and the U.S., the biggest thing they keep pointing out is our stance on Taiwan in the South China Sea, which they believe. During the NATO meetings that were recently, they pushed back and sent out some messages saying, hey, you know what, to the West, we don't stand by that arbitration case saying the South China Sea doesn't belong to us. And also, if you try putting NATO in Asia, it's going to be a big problem immediately. So pretty strong messages during that. Not a great thing. And then this week, they fired the foreign minister of China that works on the U.S.-China relations, and they put in a strong party member that's been at the post before, Wang Yi. But really, it's going to be up to President Xi Jinping. He's the one that's going to set the course. So we're going to see if the new guy really has any ways to help warm the relationship, which has only been getting colder and can cause more problems for this clean transition that we're working on. When it comes to Russia, again, horrible humanitarian thing. We're just looking at it through the energy angle, right? It's causing supply chain issues on the world, and it's continued to have ripple effects. And instead of really being more of a proxy war through the Ukraine, it's starting to be a lot more direct conflict. So recently, there's been 6 jet strikes on U.S. drones from Russia hitting U.S. drones, which is a pretty big provocation to have one army shooting at the other, and that's over Syria. And they've been boasting about it online, like, what are you going to do about it? So that's, not making things easier. And then also, Russia just left a deal that was allowing basically food to get out of the Ukraine to go to the rest of the world. Now NATO's saying, we're going to get more involved with the Black Sea. So NATO versus Russia, that tension's growing as well. So unfortunately, it doesn't seem like it's coming to an end anytime soon. And the more and more problems it causes around the world for supply chains, it's only going to cause things to become more expensive and really could put upward pressure on energy prices. Other than energy, we know that the net zero goals are moving up for state compliance. Each state wants to go green or clean faster than the other. So instead of 2050, maybe it's 2040, then the next goes 2035. So they're continuing to make the hill to climb steeper, and it's making it tougher to actually pulling off as an engineering feat. One thing to do, though, lock in your fixed adder. You might be able to, for most states, basically avoid that escalation of charges for the term of the contract. So great strategy there. And you can also execute prices to lock in load with the client quicker. And as we take a look through Q3 and Q4 of last year, if we look around all of our major markets, ICE New England, NYISO, PJM, ERCOT, they're only up and down a touch of a percent on either they dropped in renewable usage year over year, or maybe they're up a smidge, but they are well off track of what they need to be hitting to get to some of the goals that are out there right now. And just to get another touch of reality on that point, this is a recent disclosure label for Massachusetts sent out by one of the suppliers. Really, that just comes around because a lot of these numbers take a while to work out, but this is the 2022 numbers. And if we look at what's circled in red, right, less than 3% other renewables, solar was less than 10, wind was less than 6%. So that's well off 50 and a far cry from 100% renewable. And that's where we are today versus maybe what you're hearing on the news cycle of we're well on our way to getting there. So we have a lot of volatility ahead, which is another reason why taking a look at longer term strategies with clients in those outside years, especially with the low price level that we're at now. And now as we look at the generation by fuel source, not capacity, not what's being built, but what's actually being used to generate electricity on the grid, we see that wind and solar, those black and green lines are not shooting straight up. They're kind of moving up slowly to the bottom left to top right, but only a little bit. So again, these are not reflecting of a lot of the news stories that are out there. We're well on our way. We have a very tough hill to climb in front of us. That volatility could cause a lot of problems for prices, especially right now. As we take a look at the graphs, you're going to see really reasonable spot to pick up at least a portion of that load. And going back to 2010, we have not really improved more than 2% a year on renewables. Not to say that's not going to happen, but in the past, we're not jumping by 10 to 15% a year. We're moving up incrementally. For PJM and ICE New England, we are right now looking at capacity tags and sending out peak notifications. And what lends itself to add to that strategy, which is good for 80-85% of clients, is a PJM capacity pass-through, ICE New England capacity pass-through. Prices have cleared lower as more subsidized assets have been able to offer into the market, and we expect that to continue. If we see by the bright orange line on the right picture, since the new rules have been put in, we've seen the auction come down gradually, $50, $34, $28. The only zone really is DPL South because they're kind of in their own area, can't really add the generation. Might get some offshore wind, we don't know. But right now, that might be the only area to avoid with that product. One thing that's going to add to some of the risk premium, if you just lock in your capacity, is that the auction that was just supposed to take place in this June just got kicked back probably another year. So that's been delayed. PJM is, again, well off track to being a 3-year forward capacity market like ICE New England. The point of 3-year forward is supposed to give money and investments enough time to actually build these projects, unlike some of the shorter term capacity markets like MISO or NISO, who have MISO just experienced some huge problems with prices absolutely skyrocketing. ICE in New England, taking a look at the prices again on the right side, you're seeing them come down over the next 2 auctions. More subsidy rules are going to take effect. Therefore, being able to offer it at under cost should bring down the price as well. So good options for both of those markets, ICE New England and PJM. Taking a look at the weather, this is July, August, September. So we've seen this one before we get to the updated one, but we're supposed to be mostly likely above average. That seemed to be the case for most of our major markets. So through the summer, and now looking through the start of fall, pretty much the same. A little bit of a bigger orange band as we get into the PJM, NISO territories. ICE in New England still looking well likely above, and most of Texas as well. So looks like the heat's going to be staying around. Does it push a long summer into the fall where it then flips right into winter? Those are the years we see really prices starting to take off, when they don't have that break and generators don't have a chance to come offline and do maintenance as well. One of the interesting developments is we were looking at a La Nina climate pattern for quite a while. That's the picture on the right. And, that could cause for really cold winters to come through as it comes down. And that's, for the most part, what we're worried about. What is it going to do for winter prices? It can't. And so on the left, we have El Nino, which is just developed. We went from La Nina to neutral, now into El Nino. But how much the El Nino pattern develops is really the big question as we start to approach winter. Yes, this can make summer a little bit hotter, but it can also make winter warmer. Right now, 50-50, 60-40 split. Will it develop into a strong El Nino and maybe keep a lid on the winter prices and the weather from, taking off? However, right now we have gas storage in a fairly comfortable place, and these El Nino things are making people a little bit more comfortable. That's why we haven't really seen as much volatility, maybe this short-term heat waves across our markets, excluding ERCOT. But if this changes and starts moving back to neutral La Nina, and especially if the natural gas picture starts getting closer to the 5-year average or below, we could really see prices rip into the fall and winter. And that's a very slow story, but just to make clients aware, maybe it's not what they sell on now, but something to keep them updated and keep an eye on. And taking a look at temperatures, hot again today in New England and PJM. Peak notifications went out for ICE in New England and PJM today, likely to go out tomorrow as well, as long as there's not some crazy change in the weather. And then the other arrow indicated all the way to the right, next week for MISO, we see the really hot temperatures. So that might mean the day after or two, that heat might come up into ICE New England or PJM. But next 2 days, looking for peak notifications for ICE New England, PJM. And then maybe later into next week, it starts to develop again. ERCOT has been scorching hot, so no need for red arrow there. It's warm. It's going to stay warm. It's really does it set another record? How high do the LMPs clear it? Because it continues to push up, not only this summer pricing for August, but next summer and the following summer if you have a longer term. So that's why taking advantage before those pops come in, really advantageous of saving actual big money for clients. So just a quick look at, why are these peak notifications getting sent out? Right now, we're just above 22,000 for this year for ICE New England. Today, it forecasted for a peak of 21,850. Tomorrow, 23,500. ICE New England usually misses by a couple thousand on their forecast, so that can be above or below. That's why they get sent out. And we can see on the picture on the right, one of the lower years that actually cleared was around 23. So those will be sent out like that, where PJM usually in the high 130s to 150,000 megawatts there. And the notice is going to look like something on the right. Comes out, tells you a time frame to turn down on. On the left, we have the 5 days and hours for PJM, where ICE New England only is based off of 1 day, 1 hour. Still a chance to sign up on the website. It's something free you can do for clients. It works when they have a capacity pass-through because, again, if they lock in their capacity, if they're in contract, when they get the benefit, the supplier is going to keep the money. And while we're at with the markets, right, locking in the fixed adder, load following block and index are great products to go with. Maybe they think the price is going to come off another mil or another cent, but to lose 10 to 20 mils or 10 to 20 cents, right, maybe take some of that risk off the table sooner than later, and especially for those outside years. Taking a look at market data, we saw the winter move up a little bit for ice in New England. And then looking at balance of this year, looking at August to December of 23, a lot of our markets in the Northeast and Mid-Atlantic have been pretty flat, kind of hanging around the bottom. And that's what's kind of the scary part. If things start going higher for LMPs, or any of these stories start really getting legs, these prices go right to the top of where they were before. Ice in New England was pretty flat week to week, still close to that 52-week low. Calendar year 24 for ice in New England was up a half mil week to week, but again, still closer to the 52-week low now. I mean, does it make another push towards the average like it did late March into April? We take a look at ice New England gas, pretty flat week to week, still close to the 52-week low. And if we look at the short-term graph, right, we're just moving left to right across the board, kind of hanging around the bottom, not really pushing any further. And that's the picture of how high or low do we go with those black and red arrows that we looked at on the first page. So we could go to the top of where we were before, but how much lower are we going to go? We're going to go back down to when we had shut down prices from the pandemic. I mean, are we going to go back to the world before Russia, Ukraine? Don't seem as likely right now. So kind of the bottom versus where we can go higher is what we want to be weighing with clients. In calendar year 24, pretty flat week to week, still close to that 52-week low. Taking a look at PJM, the winter moved up a little bit while September and October came off a touch. And taking a look at balance of the year for PJM, pretty flat week to week, still close to that 52-week low, right? Again, similar shape, just kind of moving across the bottom. So how long do you want to wait to lock in some of that risk? PJM calendar year 24 off a half mil week to week, still close to that 52-week low. And taking a look at PJM gas using TETCO M3, off 1 cent week to week, still again close to the 52-week low. And all these shapes looking the same, right? Past couple weeks, not really too much up or down. And what we're worried about is, coming to the top, back from that range. You can use the long-term graph as well to show, this was the pandemic shutdown. And again, we also left easy energy policy during previous administrations. President Biden takes office. We're in a different world. Again, whether you love it or hate it, it's just simply what it's going to do to supply and demand. And the more that we shut down supply and we don't have that certainty of new supply coming online, a recipe that really could lead to higher prices and volatility. PJM gas calendar year 24 up a half cent week to week, still close to that 52-week low. ERCOT, we have August moving back up with this heat. It's been kind of a wild ride for the month of August for both this current year, 23, and those outside years. We've been well into the hundreds per megawatt. This is in kilowatts. So the 112 was the high we've hit recently. It was as low as in the sevens. It's creeping back up into the triple, around 101 right now. And taking a look at balance of the year for ERCOT Houston, came off 4.5 mils a week to week. However, we see that this is the one market that with the heat, prices have taken off. It has left the lows, it is now hanging around the 52-week average. Maybe it's too late to get those low prices that we were able to enjoy for a while because it doesn't look like the heat's going anywhere and we got record demands getting set down there. If we look at calendar year 24 for ERCOT, similar situation, has left the lows, now around the 52-week average. And this is kind of what the story we want to let clients know of because ERCOT's made the move. If the same things happen in PJM and ICE New England and ISO, we expect prices to go right back up as well. Houston Ship Channel, up 1 cent week to week, still close to the 52-week low, so still kind of hanging there, a little bit higher. Calendar year 24, similar story, pretty flat week to week, still close to the 52-week low. And again, Houston Ship Channel, neighbors with the Henry Hub in Erath, Louisiana, so pretty much same shape, same prices, but as we move around the country, it gets more expensive as you move to the Northeast, with PJM being the red line, the blue line for ICE New England prices. When the blue and gray are closer together or the red and gray are closer together, that's a compressed basis. It's a good time to lock in. As you can see, the red and the gray very close, and blue a lot closer than it was, several months ago into last year. So good points to lock in the basis there. And we see that Houston Ship Channel in green is actually lower than the Henry Hub. That's in gray. Now taking a look at some of the future years, as we said, ICE in New England, 24 and 25, pretty flat. Outer years moving up slightly on some of these news that's coming out about projects being built. And this is the up and down that we want to take a look at. So calendar year 23 cleared here at the high point, down to around here before the Russia-Ukraine starts off with. So if we draw lines coming across, or from current prices, move down a little bit, but it can shoot up a whole lot more. So that's the risk that we want to make sure clients are aware of. They don't need to make a move, but just let them know, that's the risk that's out there. Taking a look at PJM wholesale going in the future, we had 24 off a half a mil, while all the outer years creeped up a little bit. 24 right now is 2 mils cheaper than 2025. In 2023, the gray bar is where the last price the whole calendar year of 2023 traded at. So that's the level that all these bars could right pop back up to. So again, same thing we want to do with these graphs is, where are all the years? They've gone higher. They're at a lower point now. But, we're not back in the time of easy energy policy. We're kind of in the new world order of since the Russia-Ukraine issue started, our relationship with China. So maybe this is the new low point, and this is our ceiling of where prices can go from here. If you want to draw that out, you can either do that on your PowerPoint or print it out and mark it up in front of a client. And lastly, taking a look at ERCOT Houston into the future, 24 off a half mil, while all the outer years were up a little bit. So trading pretty close together compared to most of our markets. Houston Ship Channel, very interesting graph going into the future. This has a lot to do with the guesses surrounding the LNG projects and when we'll be sending it out of the country. So something to watch. But as we take a look at the outside years, 24, 25, and 26, we see that 25 and 26, the light blue and green are pretty much on top of each other, while 24 a little bit more expensive right now for ERCOT. So in conclusion, some of the points to consider, market hasn't really too much changed since we last talked. We want to manage risk by evaluating how high or low the market can go from here, because yes, it's going to go up or down, but really how far can it go? Evaluate in longer terms to take advantage of some of these lower prices, because they could go much higher from here. Well, unless big fundamentals change, not really pushing as much lower. Very important when comparing, utility rates of a short term versus a 12-month rate, whether the most expensive months are included or not. ICE New England, PJM, winter months most expensive by far. ERCOT, the summer's more expensive now that the fear from Storm Uri has been shaken out, at least for now. Markets have had a significant drop since the start of the new year. That's what we all know. We're in a kind of a different spot after we all had to run up through pretty much all of 2022 with higher prices. And we got PJM, NYISO, ICE New England, closer to 52-week averages, where ERCOT's now 52-week lows, while ERCOT's moved up to the 52-week average. So don't wait too long for the summer heat to move things up, or the gas story to change, or the weather pattern of El Nino to change. Government whole push to go green and clean. It's not stopping. We expect it to only pick up. They have been undaunted when they've lost the courts, which seems to be the only way that will stop a rule because of the current congressional makeup. Big question is, if we lose fossil fuel supply while not being able to replace with new projects in time, which there have been many, in a reliable and resilient manner to prevent rolling blackouts or asking consumers to conserve, what's that going to do to prices? And other than that, locking in the fixed data, talking about capacity and renewables and different products that we offer really help differentiate and take advantage of the other buckets, because those are just important to get in front of a client if they have the opportunity to save. Thank you all for attending. If you have any questions for partners, please reach out to your account manager, and everyone have a great day. Thanks.